Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is the 9th of April. I was going to say, is there AD and BC related to it? We are in post-Trump tariffs plus 9 days or whatever that might be. But ultimately, it is Brent crude oil continuing its decline. It seems the world took a pause yesterday across many financial markets and have continued on the rock dropping through water track today, with Brent crude oil currently down over 2% and trading at 61.43. It must be said that it's off the lows of the session so far in Asia, which of course is a few hours in trading. It had been down as much as it was tipping on $60 on Brent. So it has clawed back a dollar or so from the lows of the session. So maybe that's some attempt, if you want to find a floor in this market. Let's kick off with David Weck, chief economist at Vortexa. David, is it a question of when rather than if that OPEC Plus will now abandon its plans to increase supply into a sort of demand collapsing market?
Yes, I think that's probably a fair question. Yeah. Even though it's possible that there is still some time passing. I think OPEC has surprised the market last week with this accelerated announced resumption of some barrels in May, about 400,000 barrels per day, at least on paper. That was timed very interestingly. You can put up all type of speculation why they did that. I doubt somewhat that they really see particularly strong demand at this point of time. So I would probably speculate that it's a type of warning shot on compliance on those people that have been lagging with their work. I think that key decision makers as OPEC Plus probably also see what economists around the world see, which is that the world is likely to head into recession. Oil demand wasn't looking particularly good already beforehand. So the year may be tough for them, and that makes it much more important to have unity. Yeah? So it may be a type of a soft rerun of April 2020 to tell everybody either you work with us or we just flood the market.
Gulmira Razayeva, founder and managing director at Eurasia Analytics. Gulmira, you are focused in on the region of the Caspian, Azerbaijan, and how has that region fared through the week? We've had the opportunity as we go around the world to all of our commentators to get a sense of how each region has been impacted by this Trump tariff. How has your region been affected, and what is the outlook going forward?
Well, yeah, pretty much all the oil producers are affected, including the Caspian producers. Well, in terms of Azerbaijan, the Azeri Light crude, this benchmark has been always sold on premium. So yes, I mean it affects the country's economy. This low prices, obviously, because.
And what about tariffs? Have you guys been, are you like everybody else in the world, hit with a large tariff?
Well, 10% tariff, not that large. Maybe we are luckier than many other countries, but I don't think that Azerbaijan imports a lot from the US. But anyway, I think countries that are the most affected in the Caspian regions, maybe we should mention Kazakhstan particularly, because, well, first of all, Kazakhstan puts online some new capacities.
Sorry, Gulmira, your sound has gone a little bit for me. I'm not sure if that's for everybody, but your sound quality has dropped away.
It's quite possible because here in Beijing,
Beijing.
Yeah, it's terrible. It's very slow. So
maybe if you turned off your video, you might get a better bandwidth. Just go with audio. Just as a to see if that makes a difference.
Let's try that.
So that certainly helps. Yeah.
So yeah, in terms of Kazakhstan, yeah, it brought online additional 222,000 barrels of crude this last few weeks, and it faces a lot of pressure from OPEC because being neglected the OPEC. I mean, breach OPEC targets. So I think I think Kazakhstan, despite this all, but and because it increased export volumes, is like not that badly hit it, but I think in shorter to medium term perspective, this the country will feel it the most.
Now, why, Gulmira, did Kazakhstan be such a continuous sort of quote unquote violator of OPEC quotas? Why was there any particular reason? They just thought they could get away with it, or they had to keep producing at these levels?
There are some 8 countries, I think, which kind of allowed to, as a compensation, allowed to increase their production and export. But because, as I said, new unit started up at the Tengiz project, which helped to lift Kazakh output by some 220,000 to record 1.75 million barrel a day in February. It is a hefty 280,000 barrel a day above quota. So it's been under scrutiny for these days, and other OPEC members are extremely frustrated with Kazakhstan. But I think, it's just being, just breach the targets. It's just being, kind of neglecting the requirements. So I think this gonna be. They promised to put this to the end, but we will see. I think they're gonna have a lot of pressure from the other members.
Rustin Edwards, Head of Sales and Marketing at TARS International. Rustin, welcome back. Lovely to see you. Your thoughts and insights as to, are we seeing this, what is now clearly a global trade war, particularly today with the escalation on China, over 100% on tariffs there have accumulated over the last few weeks and now in the last few days. But are we seeing this yet reflected in sort of tanker rates and cargo rates? Is shipping giving us starting to show that trade is slowing down? Where is the shipping world impacted so far?
You got to look at each different segment of shipping and look at how they're reacting. Tanker rates currently are very strong. A lot of this has to do with the fact that OPEC increasing output by 400,000 barrels a day starting in May put a nice level of support under the VLCC target. And then on top of that, you've got companies pushing volume because despite all the tariff talk, energy is not included. And so energy flows will still move between point A and point B without much of an issue. And there's fairly good demand if you start getting into the we're in the middle of refinery turnaround season in the United States Gulf Coast refining sector, European refining sector. So there's a lot of need to push volumes into different regions to cover the shortfall with the lack of refining. And we're getting this usual seasonal stock build for gasolines for summer driving season, as that typically will start kicking off in another 2 to 3 weeks when people start getting ready for Memorial Day in the United States and vacations start here in Europe. So from tanker side, things look pretty good. I think the segment that's getting hit the most right now is the container segment, because that's where all your manufactured goods gets transported on. And with the increased tariff pressure from Asia to the United States, Europe to the United States, it puts a big dent into demand for container traffic on a go-forward basis. Yes, there are people trying to get goods in front of tariffs transported, and that has already happened. And now we'll see what the net impact is going forward. I think the biggest flag yet to hit shipping is going to be the USTR report on China-built ships, China-operated ships, which comes in on April 17th, which could add an extra $1.5 million per port call, depending on how your ship is operated or where your ship was built or what type of fleet you have as a ship owner. And that one is yet to hit for U.S. trade. And, I think that one's going to be the nail in the proverbial trade coffin when that one hammers home.
David, going into this current window since April 2nd and the sort of launch of the tariff announcements, and now the implementation, the announcements were a week ago, and now we're getting into the implementations. And of course, all of these things take time to hit the ground. But ultimately, we went into this current window, let's say through the first quarter. The forecast for demand growth in 2025 was generally in the 1 to 1.5 million barrels a day by most sort of international multilateral agencies and others. Where do you think we're looking at now? How big of an impact do you think global demand growth for oil will have as we move deeper into the second quarter and these tariffs and trade war bed in and start to impact demand and consumption?
Yeah, I would like to start with saying we don't know what happens tomorrow. Yeah, so there is no guarantee at all that this tariffs will still be in place. It may escalate even further. So basically, the answer is based on what we're seeing at this point of time, but it may change quickly. So I would then say that from our point of view, oil demand has probably not grown that fast, and this was already before not expected to grow as fast as you said. If you look at seaborne oil flows, both for crude and product, they're basically stagnant for years. And I would say that with the current economic outlook, we are looking at 0 to negative oil demand growth. So basically outright decline in oil demand.
After the tariffs, or
this year?
It was already going to be in place.
What I would like to add quickly is that with this current low price window, what may be a bit different is basically the apparent or the buying for crude. Yeah, we see currently very strong buying for crude in the market, which is not directly related to demand, but which is related to concerns about supply from sanctioned countries. We have a flood of oil going from the west to the east currently, as people in India and China and other places try to make sure that they definitely have crude. But at the same time, Iranian and Russian crude is arriving at very high levels. So that's one story. And the other story is the lower oil prices fall, the more likely players like China to put extra crude on storage. Yeah? So you can discuss is that demand or not. For the shipping industry, it's definitely demand. From an oil demand calculation perspective, it's not demand, it's stock building. But that's something that may save specifically the crude market to a certain extent.
Gulmira, looking at the decline in revenues now that oil-producing countries are dependent on the Caspian and in the Middle East, where do you think this goes from the point of view of the decision-making of OPEC Plus to be able to sustain their supply increases? Now just started April 1st. It's going to accelerate in May, triple what it was in April. Your thoughts on OPEC Plus' ability to maintain this increased supply policy as revenue declines dramatically?
Well, I think this gonna last for a while. They gonna maintain this increase, especially, as I said, for those countries that would increase as a compensation that they've been cutting for quite a long time. Some other countries like Kazakhstan and Iraq, they were increasing their production and export. So some countries will maintain this increase for a while. But I think the main factor that will affect the prices and especially of some particular producers and exporters, is the redirection of some amount of oil to the Chinese market, because China now faces huge difficulties of buying Iranian oil, as the recent sanctions or announcement by the Trump administration that it will also target the shadow fleets and shadow companies, especially Malaysian companies that are exporting Iranian crude to China. So that means that producers like Aramco will have to make deeper cuts to its formula prices to encourage its Chinese customers to raise their requests for upcoming loadings, and for instance, May loading term crude. and given that some refiners, they're coming back from seasonal maintenance, so they will increase their demand, especially like in China and some other Asian countries, they will increase the demand. But this will mean that probably Aramco and other producers, non-Iranian, producers, they would they may limit price cut to 1.5 or 1.80 dollar per barrel from the previous months. So this will and the same is for Europe. In Europe market, opinions are mixed about how, for instance, Aramco will adjust its official prices to the region given an uncertain demand picture. All these things I'm sure will affect the price for some for particular exporters and for some particular buyers.
Rustin, when we look at the current price decline and the different impacts it'll have, obviously, on revenue of national energy companies, it may also increase buying given the cheap level that it is. But I wanted to get your thoughts on where does it impact Russian oil flows, which are now clearly out of the price cap territory. They're below price cap, so that means no longer really a need for a dark fleet here. Will we see a shift in how the tankers and the ship owners and those who were avoiding Russian oil start getting into it, or what are the dynamics to play out there now that we're in a lower price point below price cap?
Well, it does open up the trade valve where a lot more people can now touch Russian oil and be confident that what they're doing is below the threshold set by the EU and the US back in 2021, 2022. And so that should just make flows move a lot easier. I mean, does it change the dynamics of where the oil heads to in the marketplace? Probably not. But it does allow countries like China and India, who have been the biggest buyers of Russian crude, to buy Russian crude. And it'll allow more ships to move the Russian crude if a ship owner wants to go down that road. I think the problem you'll have with ship owners switching tactics, saying, I want to be in the clean fleet, now I want to move Russian oil because it pays a little bit better, is once you get that taint of transporting Russian oil, mainstream shippers may not want to charter your ship again. So you might end up putting yourself in that dark fleet if you pull that trigger or not. So at this stage, I don't think you see much shifting happen between clean fleet, dark fleet. I think you'll still just see more open trading. Trade houses will touch Russian oil without much of a problem because you're well below the price cap. They can use Western services at this point. So it's now just a matter of finding the right insurance and the secondary service providers to ensure that you can move the oil safely and under the right regime.
It kind of essentially makes the sanctions on Russian oil essentially mute in terms of their.
It's not a sanction; it's a price cap.
Price cap, sorry. Yes, exactly. Which ultimately makes it irrelevant because now we're well below. Let's go to the survey question and see where the view of the room is on this sort of initial point that I put to David earlier. When do you expect OPEC Plus to abandon oil supply increases? Not if you did, but I'm saying it's a when do you expect? They abandon May hike, which is already bedded in, or at least announced that in May they will triple the increase, accelerate the increase. They'll abandon that in May already, or they'll stop raising from June because they've already announced May, and so June is the next domino to fall, but they'll stop raising from June. Or three, they'll stop raising in Q3. They'll wait, they'll do one quarter and then go back to pausing increases. Or they won't stop supply hikes at all. They'll continue with this sort of strategy of raising supply, hell or high water, whatever the chips may fall. Your thoughts on which of these OPEC Plus is likely to proceed with? When will OPEC Plus? David, the other piece that's sort of in the quandary at the moment is where do the monetary policy makers go with their rate management. We're sort of got the Fed at the top of the list, caught in a little bit of a sort of rock and a hard place, in the sense that the inflation that's meant to come with tariffs would require rates to remain elevated, but recession and growth challenges would require rates to come off. Your thoughts on that decision that particularly the Fed has to make, what they're likely to prioritize, how that might trickle through to impact the markets?
Yeah, I'm not sure whether I can give a strong guideline. I think the market is in such an unprecedented level of uncertainty that, at least I think they will reassess this. I don't have a strong view. If you allow, I do want to follow up a little bit on what we have discussed before. So I do want to make the point that Chinese imports of Iranian crude in March have hit a record high, according to our data. Yeah, so the sanctions of the US have at least not yet had this impact of reducing Iranian inflows. They're actually rather the reverse type of. There has been a temporary decline in January, a temporary hiccup after the OFAC sanctions, but since then the Chinese have taken very clear steps to make sure that also sanctioned tankers can unload in China. And for Russia, I would want to say that there is a strong impact from this OFAC specific vessel specific sanctions. So there is a lot of tankers by now that are sanctioned specifically, and for example, pretty much all the Arctic oil from Russia is going on sanctioned tankers. Yes, the lower prices right now help them to incentivize a lot of Greek vessel owners to re-enter or enter for the first time ever the Russian trade. So for the Urals flow, that is helpful. But Russia has certain challenges as the fleet that is accessible to them is steadily shrinking. And that's also a key supportive factor for the freight market generally, because the overall fleet is shrinking. In the Aframax segment, we are now at below 65% in our count of the fleet that is definitely clean fleet. The rest is in gray and darker tones.
David,
So
I just want to...
Yeah.
I just wanted to follow up on the obviously the first question, where the Fed may go, and have clear, obviously that's a uncertain direction, but we maybe pull back the lens a little bit and phrase the question a little bit differently, and that is, there's a lot of headlines out and sort of language that this is a sort of a historic shift in the global economic framework, a historic shift in the trading architecture. Long established trading rules and agreements are being blown up. From that point of view, do you subscribe to that thesis? Is this a sort of an inflection moment? Like we saw, maybe, I don't know, for different reasons, 08, 09, but how historic is this, or is this just a bit of drama?
I think it may be as historic. That's the biggest single event since the Second World War. It's completely throwing the global trade picture off the standard patterns. I mean, if the Chinese-US trade war in particular goes on, it basically suggests an entire cutting of economic ties between the two countries. Of course, we will see whether we go there. Honestly, I'm thinking increasingly that this will not work out for the Trump administration. That somehow they will have to pull back because the consequences of this are just far too big. If he goes forward with it, I think it basically means in the medium term a complete isolation of the US economy from the rest of the world. And the rest of the world, of course, will work together very closely to counteract the impact. You can basically expect a flood of cheap products, for example, hitting the rest of the world outside the US. So that will counter inflationary pressures outside the US. But inflation in the US, if this thing as announced currently is going on, must be skyrocketing. And it's very clear from an economic point of view, if the US citizens, or I shouldn't say it perhaps this way, because not all of them want to do that, but if the US population is to make their iPhones and all the stuff and shoes and T-shirts and so on themselves. Yeah, I mean, you can
I
have
saw a
a good
very
idea
funny
of what needs
meme
to be done.
yesterday. I saw a very funny meme yesterday on LinkedIn of Americans working in factories trying to put together stitching on different things. He said it's like back to the 19th century. Gulmira, as you are in China, do you get a sense of where the mood is there, the determination to face off on this trade war? Will the Chinese blink first? Will the Americans blink first?
Well, yeah, China is the biggest casualty of Trump's protectionist turn, and obviously
I mean, China
there's a
was
huge
already
concern.
struggling.
Yeah, exactly. And there is a big concern among the companies, especially the energy companies, energy majors here in China. We have all those big energy majors here at the conference, including SNOOC, Sinopec, PetroChina, etc. So, yeah, I mean, great uncertainties for them as well, because also China, as a reciprocal, taxes, also impose huge taxes on the U.S. and including on the petrochemical products. Also, I mean, China doesn't have any, at the moment at least, any alternative of importing, for instance, LPG from anywhere else. It's pretty much dependent on the U.S. LPG imports. So it makes the situation, even harder. But so, I mean, there is I wouldn't say that there is a hope that this can be anyhow averted, like we see in some European countries and leaders, because the Trump White House has already announced that it's inputting tariff revenues in planned budgetary process. So, and I don't think that this can be anyhow. This trade war can be averted. But yeah, there's a great concern about all this, trade war, especially on China.
Rustin, the other thing you would thought that the Trump administration couldn't really have their eyes on so many things and their actions on so many things. They seem to have discovered the IMO yesterday, the International Maritime Organization, which is in the middle of a week in which they're to make very profound decisions on the decarbonization of shipping, and the Trump administration has pulled out of the IMO negotiations yesterday to decarbonize shipping and threatened to retaliate, as they like to do, against any fees imposed on U.S. vessels. Your thought on that decision by the U.S. administration, the IMO talks that are currently underway, what impact it will have to all of that?
Well, MEPC 83 is the big discussion point. There is the imposing a carbon emissions tax on maritime shipping on a global basis. It's no surprise to me that the U.S. pulled out of it because, again, under the IMO treaty, there is no specific angle which allows the IMO, a UN organization, to tax individual countries on whatever. Yes, they've set up different funds to support oil pollution, and that's something that has gone through without much of a tax, but a fee on the shipping companies itself. But here you are actually trying to impose and collect a tax, which the U.S. would have a hard time passing even through the U.S. Congress if that ever came to that part of the treaty, because again, you're taking a foreign UN entity trying to tax global commerce to reduce carbon emissions. And the U.S. is not the only country that's opposed to it. You have China who's opposed to it, as is India, as is most of the GCC countries, a few countries in West Africa, and a few countries in South America. And so you do have a fairly large block of people, of companies that are, and these countries are primary energy consumers, energy producers, who don't want to see a $300 a ton CO2 emission tax be imposed on shipping globally, because that's just going to decimate global trade and reduce the amount of trade flow and just cause global inflation. And
so putting everything else aside, this was a non-starter regardless of this other Armageddon tariffs that we're seeing. These are not
started to begin with, and it's going to be a hard thing to impose because you'll have all these, you have 180 countries that are part of the IMO. You have to get them all to agree on a majority basis. Will something eventually pass? Yes. I think the IMO going down a tax regime is probably the worst way to go. The IMO could easily just say, instead of allowing, they could declare, as of this day, no more petroleum fuel being burned on ships. And that would be a far more easier remit for the IMO to get across than imposing a carbon tax on people and then trying to collect revenues. Because the question comes at that point, where is this money going to go? How do you stop any fraud, waste, and abuse?
I mean, governments even struggle to do that sort of thing. It's hard to see how a UN agency could try and police that. David, let's give you the last word here with the survey result. The stop raising from June seems to be getting the most votes, along with won't stop at all. They will continue. I suppose as you mentioned in your opening comment, David, it is why I wanted to circle back. The reasons why OPEC Plus have chosen to do this at this time, I suppose, would be the guide as to when they might stop doing it. You had indicated that maybe it was to get the misbehaving producers into line. Where do you think that the alignment is with the wider sort of geopolitical strategy of Trump's wish for a lower price? So with a weaker dollar and a lower oil price, it could take a lot of the sting out of the tariffs.
Yeah, I don't think, I mean, to a certain extent, yeah, it's type of supportive. I would generally point towards the last 2 years where OPEC has very successfully managed the market, has kept crude stocks at very low level. Our data, by the way, showing that over the last 2 months, crude stocks onshore and offshore really surged significantly higher. There is a big supply surge. So from that point of view, the pressure on OPEC is surely increasing. And I think it may very well be a temporary phase we're seeing right now. Yeah? So at this very hot environment, they may be fine to have temporary lower oil prices, but generally I would assume them to come back in the medium term, and that's a couple of weeks or months, to make sure that prices are again in the range where they want to have them. And in particular, that crude stocks are not building strongly. Because that is having longer lasting effects typically on the market.
Takes a long time to get those unwound once they're locked in, years, and as we saw and not so long ago. We're going to have to wrap it up there. Brent crude oil trading down 2.5% this morning, touched on 60, but has come off the lows, and now at 61.25. We have an interview coming up this morning with the managing director of CCED in Oman, Walter Simpson. Of course, CCED and Oman is part of that long tail of OPEC Plus countries that are managing supply. His view is they're going to probably have to revisit the decision to raise oil supply. So worth plugging into that. David Weck, thank you so much for your participation this morning. Rustin Edwards, great to have you back. Gulmira Razayeva, have a wonderful trip to Beijing, and we look forward to seeing you all again soon. Thank you. All the best.
Thank you.